Okay, I'm now going to go into what is called the loan strategy. This is another method of making money, but this comes as, I'm going to type in loan right here. This basically comes as a long-term method of investing. So, okay, let me just do it this way so that we get to see exactly what I'm doing. I'm going to click more right here. I'm going to search for loan. Where is loan? Loan, finance. Yeah, loans. Yeah. This strategy that I'm going to show us now is called the loan strategy. This is a method of, like I mentioned in one of the classes that I taught us, you can never outtrade the market, in the sense that you are going to make money from trading, but always have your long-term investment. Always have your long-term investment, especially in Bitcoin. I cannot overemphasize this. And as well as you are trading, the long-term investing is yielding money, and your trades is yielding money for you on a daily basis. So, or on a very consistent basis. So I'm going to show us the loan strategy for long-term investing in cryptocurrency. As you can see here, I clearly have a loan. I clearly have a debt of $823, which is a good debt. It's not a bad debt. As you can see, my liquidation price is $56,000. Bitcoin is currently $105,000, and I currently have a loan on it. Now, I emphasize in the very first class that when you buy your Bitcoins, never sell it. Never sell it. If you need money for one or two things, take a loan off it. Take a loan off it. I'm going to use this theoretical example. Now, I have a coach that taught me this. Let's say, for example, you had $100,000. You wanted to borrow. You had $100,000 in your crypto portfolio, and you wanted to borrow $100,000 from the bank. Let me say, for example, you were in the US and you wanted to borrow $100,000 from the bank, but you have $100,000 in your crypto portfolio. Now, rather than sell your crypto portfolio, you think of it this way: the bank is going to loan you the $100,000 at a rate of 7% per annum. With your investing abilities in crypto, you could be making a profit of 6% of that $100,000 on a monthly basis. You could be making as much as 6% or 4% or 5%. But I'm going to take, for this example, I'm going to take it as you were making about 6.5% a month based on that $100,000 in your crypto portfolio. The bank is lending you the $100,000 at 7% a year. Now, in your trading, you find out that in a year, you made 78% profit of the $100,000 in your portfolio. And the bank is simply offering you an interest of 7% a year. That's really cheap. So you want to go ahead and borrow the bank's money. That's the concept that works here. Now, let's say, for example, you had your long-term investing, and let me say now is a good time to invest in Bitcoin. You had about, let me say, $10,000. You buy your there's a long and short strategy of this loan. I'm going to show us the long, and I'm going to show us the short. Now, for the long strategy, you click start borrowing. We'll click start borrowing. I click start borrowing. Let's say I have Bitcoins. I think I have some Bitcoins here right now. I'm going to change that BNB to Bitcoin, that collateral amount. I'm going to change it to Bitcoin. Now, I already have Bitcoins here. So I'm going to click max right now. The basically means that my Bitcoins will be the collateral for that loan. It will be the collateral for that loan. That's basically what that means. I'm going to click max right here. You can clearly see on the screen, I can borrow up to $490 more. And if I borrow $490 more, my Bitcoin will still be in the market. It will still be as though whatever I have in the market, if it's $1,000, I think here I have about $2,000 invested in this loan strategy right here. It will still be as though that $2,000 is working for you. So I borrow this $490, do whatever I want to do. you can clearly see on the screen there's something called current LTV. LTV means loan to value. What does that mean? That's a ratio. It means that the loan that you took and the price of Bitcoin, there is a ratio. That ratio basically is what is used to calculate your liquidation price. What does that mean? If I borrow $490 right now, my liquidation price will be $90,548. Now, if the market is approaching that liquidation price and it eventually hits that liquidation price, I'm going to lose all my money. That's whatever I put in as collateral. I'm going to lose all that. I don't want that to happen, and I want to manage my positions. So I'm going to put the liquidation price as far as possible. As you can see from the live loan strategy that I have here, my liquidation price is currently $56,754. That is very safe in my opinion, and I can reduce it further by adding more money. I'm going to click my live loan right now. I'm going to click adjust LTV. LTV means loan to value. I'm going to click adjust LTV. I'm going to click, let me say I want to add about $100. I don't know if I have that there. Okay, I don't have Bitcoins there right now, so it won't work. But if I add more Bitcoins as collateral, I can drop the liquidation price. It's the same concept used in the perpetual contracts that you can add to the margin and drop the liquidation price. I can add to my collateral and drop my liquidation price right here. So I'm going to no, well, I already have a loan placed here, so I guess it's just simply if I were to do what I said, let's say I want to borrow maximum. You simply confirm. Let me change that to $300 or so. Okay. You simply confirm. If I borrow $200, my liquidation point will be $77,000. We click confirm. The loan will be placed. Now, this is called flexible rate loans because there is no timeline to pay back. You don't have a timeline to pay back. It is an indefinite loan. Annualized interest rates or you basically pay. The interest rate fluctuates. That's kind of also why it's also called flexible loans. But you can be assured that your profit can never be, the interest rates can never outdo your profit if you know what you are doing. So forget about the interest rates. As you can see, the interest rate is very low. The interest rate is 6% per annum. And I'm confident that with a loan strategy, you are going to make over almost double your money in a year. So the interest rate they are charging you, as far as I'm concerned, is basically useless. Usually, this is Binance now. When you place a loan, you can find your assets. I clicked assets right now. I'm going to review what's here. I click asset right now, and I'm clicking N. So basically, with this current loan strategy in place here, my actual money in this loan strategy is $860. But you can clearly see from the BTC holding, it is working for me as though my money is $1,683. You can clearly see that that's a bit of leverage. So my actual money is $860 and it's working for me as though it is $1,683. That way, I make more money. Now, I would advise you that I'm going to go back to the home page. We're going to go back into loan. I would advise you that you stick to using this loan strategy for only Bitcoin. The long version of this loan strategy should be used for only Bitcoin. It is a long-term investment. It is not a trade. However, if you are the kind of person that wants to make profit, when you see that you have made reasonable amounts of profit, you can sell. You can simply sell by repaying the loan. You click here. You switch from borrowed coin to collateral. What does that mean? You click they should repay the loan from the value of your collateral. Once all the loans have been repaid, you have your Bitcoin. And you can simply decide to sell your Bitcoin through what I taught in sports trading yesterday. Now, I'm going to go into the short version of the loan strategy. Before I go into that, before I forget, I want to show us the magic of this loan strategy. Let's say, for example, you had 2 million naira. You had 2 million naira, and I want to see us as I'm saying this so that we can follow. Let's say, for example, you had 2 million naira, and your friend, your mom, whoever has 5 million naira, and Bitcoin was down. Because I did this thing personally when Bitcoin was about $15,000. And now Bitcoin is down. Bitcoin is about $15,000, $30,000 or something like that. And you have about 2 million of your own money. Your friend has about 5 million. You can borrow your friend's 5 million. Tell your friend that, look, I need your 5 million. I'm going to return that 5 million to you in the next 5 minutes. In the next 5 minutes, you use your 2 million, you buy Bitcoin, you take your friend's 5 million, you take your friend's 5 million, you buy Bitcoin with it. Now you have 7 million in Bitcoin. You immediately take a loan of 5 million. Give your friend back his money immediately within minutes. So this is not a situation of you are owing somebody. Now it's between you and an exchange like Binance. Now you have a loan on top. Now you have 7 million naira in Bitcoin. Let's say you did this back in time when Bitcoin was $15,000. Now you had 7 million naira in Bitcoin. You had a 5 million naira loan on top Bitcoin. On top, you had a 5 million naira loan on top your 7 million naira Bitcoin. Now, as Bitcoin rose from $15,000 to, let's say, $90,000, that is about give or take times, that should be times 6. I'm correct. That should be times 6. So 7 million times 6. Now the value of the naira also depreciates. So, but let me just, for the purpose of clarity, I just want us to see this. 7 million times 6. That should be about 42 million naira. Now your money would have grown to 42 million naira. Now, if you subtract 5 million naira, the debt from 42 million naira, you are left with, that should be about 37 million. You are left with 37 million. Then there are some interest here and there. So let's say you are left with 36 million naira. Now the naira also depreciates. So most likely, and the naira depreciates in a way that if you did it at that time, naira actually depreciated maybe times 3 since that time. So we are talking about your 36 million naira being basically 100 million, if I'm not mistaken. But for the purpose of this class, I'm just going to say you have 36 million. Now remember, you originally had 2 million. Originally you had 2 million, and now you have been able to grow your 2 million to about 36 million naira, give or take, using this loan strategy. It's a long-term strategy. It's a very important strategy. You make millions with this strategy. So let's take note of that. So I'm going to go back to Binance right here. I'm going to show us the short version of the loan strategy. Now, I'm going to be using a coin called Illuvium as a case study. Let's say, for example, I click start borrowing. I don't want to borrow USDT. I don't want to borrow USDT. I want my collateral to be USDT. I think what I need to do, I need to just give me a second. I need to transfer money so that we get to see how this works. Live and really follow. Okay, just give me a second. I want us to clearly see this. I'm going to transfer some USDT. we already have some USDT in spot. I don't know why it is not reflected there, but however, we move on. We move on and continue the class. Now, like I said, I want to borrow, for the purpose of explaining this, I want to borrow a coin called Illuvium, ILV. Then I will be using USDT as collateral. Yes, I want to mark that out for me. Yeah, that's good. Now, how the short version of this loan strategy works is that, assuming now, there was a time where this Illuvium coin was about $2,000 for one. As at now, as I speak to you, it should be about let's say $15 for one, thereabout. About $15 for one, if I'm not mistaken. So it crashed all the way from $2,000 for one to $15 for one. You can see that's a huge drop. Now, there's this. So the short version of this long-term loan strategy has a little window. How do you make money from this window? When you notice that alternative coins, altcoins that are not Bitcoin, especially coins that are low on the scale, there's just a hype around them, and the coins are so overextended, they are at all-time highs. For example, this coin called ILV, Illuvium, reached $2,000 when there was a hype about cryptocurrencies that were tagged in the gaming space. So it's a gaming token. It reached an all-time high of $2,000. Let's say you got in at $1,500. What would you have done? You would have, let's say, for example, you had $10,000. You would have come here, put your $10,000 as collateral. You put your $10,000 as collateral in this place called collateral amount. You click you want to borrow. Let's say what you would have done, you would have borrowed about $6,000 or $7,000 worth of Illuvium. So when the price of Illuvium was $2,000, you would have borrowed about $7,000 worth of Illuvium. Now, immediately you borrowed $7,000 worth of Illuvium, you will go to your spot trading and sell that money, convert it into USDT, and now you basically have you now owe them Illuvium. You don't owe them USDT, you owe them Illuvium. Now, let's say at that moment, give or take $7,000, or that would have been like about, let's say 2 Illuviums would have been $3,000. 4 Illuviums would have been $6,000. So let me say you borrowed about 5 Illuviums. So what you owe them is 5 Illuviums. And as at now, we can clearly see that if we were to pay 5 Illuviums back at the rate of $15 per Illuvium, crashing from $2,000 for one, if we were to pay that loan back, that would be $15 times 5 with some interest. With some interest, we'll be paying them back $75. With some interest, let me say $100. So we borrowed $7,000 worth of Illuvium, and now we get to pay back just about $100. You can see how beautiful that is. So this is the short version of the loan strategy. You make millions of dollars through this strategy and that. So with that, I've basically come to the end of the class for today.